Yeah, I'm losing my
And
edge.
today we are talking about going deep on dollars.
Something you would need. You were actually short dollars, which paradoxically made it harder to pay for the bumper, but probably paid you a little bit in dividends today.
I was not short dollars in the sense of bearish, profiting from bearish activity in dollars. I just don't have enough dollars. I'm short on dollars.
You were just having them fly out of your account at an incredible
I
pace.
wish that I could go deep on dollars in that sense, but we're going deep on dollars in the informative sense here today. Small dollars, a great futures market brought to you by the Small Exchange, allowing you to trade the U.S. dollar against, 7 currencies?
Yeah.
A basket of 7 currencies, giving you a very straightforward dollar trade, especially on days like today. You know, we cycled through the performance earlier of the 5 major currency pairs that a lot of people look at that are, part of this dollar basket, and varying degrees of performance, all green on the day, which is causing the dollar index to be lower on the day. But, having to pick through all of those, and you even highlighted, Canadian dollar has actually it tends to have more of a positive correlation with the US dollar, even though it's an exchange rate against the US dollar. And then, yen can also move with stock volatility, and it can be kind of a gauge of fear in the stock market. And euros and pounds, they have their own relationship in here. And Australian dollar, a good proxy for China. Just a lot of things to balance when making a decision on our dollars going higher or dollars going lower. And so today wanted to go deep on the conversation that we started a couple of days ago, which was this mixed bag of currencies and everything that I just highlighted there, Pete, and that you've been highlighting for years and years, because you've always been at your core an FX dude. This is what it translates to, right? You've got this yen market that you see the spike here in the volatility spike of March, and that's what moved yen aside from the movement in dollar in general. And then you've also got here individual movement in Australian dollar sinking the farthest amid that March volatility because of its ties to industrial sectors and China. And then you've got the euro doing its own thing here, now being the outperforming sterling here in blue, which it has underperformed for months prior. It's just a lot of stories to keep track of when you're just usually a retail trader, a modern trader trying to get access to this asset class. You just want to trade dollars, right?
Yeah. And you know what? We've kind of gone back to this theme again. Or any of these choices wrong? No, but they just add a level of complexity to them. And it's not trade smalls or trade these dollar-based futures again. You don't have to pick a side. Pick collectively what works for you. And I think the one thing we keep going back to is each of these processes, one of the hardest things with futures is getting enough time to learn. We tend to run out of money before we run out of time. Sorry, guys.
Hello, Leapy.
Yeah. And my son's outside and the dog is freaking out. I think that starting with something simple, you can always add, you and I have run this exercise and we're always careful not to do it. You can always add complexity. Oftentimes that comes with, time cost and money costs because you're learning a complex concept in real time.
Exactly.
So let's start small. And I honestly, even for me, I just find that the dollar index in this particular instance, just having and I keep saying this, is having a bearish dollar bias this year. I like part of the fact that I can just put that trade to work and not have to labor so much. You're right. My mind from 30 years still runs through the crosses, and I look at that, but that's 30 years of doing it professionally in a spot market as a dealer at a bank and things like that. So, not everyone's coming from that or needs to come from that to be able to trade dollars.
Yeah, no, and I appreciate that you mentioned 2 things to quickly hit on before getting to a different angle here on currencies than we did cover on Monday of this week. The money cost is truly there in this complexity. Say you went to the Japanese yen, you wanted to be long dollars, okay? And you can see here this green line for most of the year has been positive, and you would have been positive on the year by
Right.
buying this dollar index January 1 of 2020. But for most of the year, if you went to the yen and sold that to get your long dollar bias, you're actually out money most of the year with the dollar higher.
Right.
That's that money cost of trying to figure out which one is the right one to be trading. And usually people arrive at the euro has the most robust negative correlation to the dollar, and that's probably the best way to get that inverse dollar. But you lose money, and then also you lose time arriving at that decision, because that's also another valuable thing. Say I go to these other major currency pairs, and I want to figure out which one is the one to trade right now. I have to read articles, I have to read contract specs on each of them, and that's that time lost. And getting to a bit of that contract spec here thing, it's not an easy thing, and I think it's something that the complexity and the annoyance of it, frankly, a lot of traders like yourself, Pete, and myself, and people who've been doing this for years and years, they kind of take for granted that it's taking up space in their mind and taking up time in their daily trade. And that's just to say that you've got different
Right.
minimum ticks here across the board, aside from sterling and Aussie dollar having the same minimum tick increment look to it, but then different notionals for that same. It's almost like, okay, I got two markets here that have the same look to their minimum tick, different values, and then you say, oh well, euro and sterling, they got the same value of a minimum tick, but this is actually half here of this full tick in sterling. And then you go over to yen, and Pete, I had to decrease the font size of this section of the table to get the yen's minimum tick in there. And it's this frustration that I think a lot of people who are already over it felt years ago when they got over it. And a lot of people who are trying to get into FX now are feeling, and a lot, it frankly turns a lot of people away. And you might say to yourself, oh, well, if I make myself a little cheat sheet on my screen with all these tick increments, then I just learn it once and I don't have to worry about it again. Well, that takes up space on your screen. It takes up space in your head. It takes up space and time when you're trading the thing and you're saying, oh, I'm in 6B, so this tick is 6.25. Oh, I'm in 6E, so this tick is actually 12.5. That's all time lost
Right.
there, getting on board with these contract specs that people, Pete, don't have to get along with anymore, right?
No, and you make a great point. You were compelled to. If you wanted the benefits, if you wanted the trade, you had to put in the time. And it's funny, you look at these, and this is a great example, Frank, and this is just one asset class. This isn't stretching between fractions of a cent in corn or fractions of a 30-second in bonds. But
Yep.
all this seems like, well, I can consume this and learn this. Sure, we all can. But what becomes hard is when these things are in flight and you do
Yes.
want to trade them all of a
Yes.
sudden, all that I got these under my belt becomes very difficult to kind of adapt on the fly. So,
Pete, you and
yeah,
I to this day get phone calls from Tom, or usually Tony, God bless his heart, dealing with Tom in a way from the Tasty Trade Network. We get phone calls from them, guys who've been trading all these different markets for years and years and years, still going, oh, euro's moving today. What's the minimum tick in that again? I mean, it takes up time and space, and it especially if you're trying to trade something on an active basis, trying to tap into that professional feel of
right.
short-term price action, dude, having to calculate that is a real hindrance, and it gets in the way a lot of times. And if you have to second guess yourself and say, okay, if I'm trading euros, am I up $125, or am I trading sterling and I'm only up 62
Right.
and a half dollars?
Right.
When you're processing all of that and you're deciding whether or not to take off a position, the trade could be gone in that matter of time. It's really no small task to take all of this into account. And it translates to a very confusing, and sorry,
Yeah.
I tried to get as many markets in here as possible. Just
No,
a
it's a good,
comparison.
right.
Looking
It's a
at
good takeaway.
looking at these y axes, Pete, um, those different increments are hard to understand. You've got this range of four currencies here that are all part of in the white this dollar index, this singular thing that has moved from 152 to 162, $10 range that is $1,000 range notionally. You've got all these different ranges: euros 107 to 115, sterling 115 up to 132, Aussie dollar 58 cents to 70 cents, and then yen uh, uh, I don't even know really what to call that.
90 cents.
Nine tenths of a penny,
Yeah,
nine tenths of a
98.
penny to
Yeah.
almost a full penny there in yen. All different increments, different looks, different values,
Well, and
and
do you know what?
also
Right. Do you know what's funny here is you say, okay, well, this was easy. The outperformer was the pound. Look at the chart. You know what? Because of the confusing tick size, wasn't the case. Actually, the outperformer was the Aussie in terms of
yeah.
dollars. So even looking at this, it's not easy to identify. Well, the old, if I had, which one would have been best? It's this is a representation of their movement, but it's not clear as to exactly what did perform or outperform.
Well, and these
Oh,
traditional
look at that. I was right, huh?
currency futures. You are a genius, my friend.
Yes.
These traditional currency futures, Pete, also exhibit just large moves notionally. When
Yeah.
you take these awkward multipliers and these awkward increments and
Yeah.
multiply them out, you've got a high to low range pretty much from 10,000 to almost 13,000 there in that outperforming Aussie. It's tough to get along with. It's hard to start to understand and think about on the fly. Whereas you go over to SFX and you see, I think last time I saw it on a platform, it was down 60 cents today. It's down $60, man. Okay.
Perfect.
If I sold it at unchanged, I'm up $60. If I bought it at unchanged, I'm down $60. And from high to low range of like we just looked at, about $10, a little bit more than $10 here this year. That's just translating to that $1,170. It's a pretty simple translation. It's a smaller product than the traditional futures in the field, and it keeps this currency trade very small, standard, and simple, which is something we live by. Whether we're trading
Hey, that's catchy.
equities or yeah, it is. It is catchy. I don't know. I didn't come up with that. I don't know who came up with that. That might be you. But either way, small, standard, and simple here in currencies, same as equities, same as metals, same as interest rates coming down the line and energies coming down the line from the small exchange, giving you just a price that's easy to look at, doesn't hurt the eyes. I mean, also, we're looking at equity products right now, and hopefully we can start teasing this in the next coming weeks. The next equity product from the small exchange, guess what? It's going to tick in the same increments as this FX product, and it's going to have a price that's $20, $30, $40, something manageable relative to those other equity products that are we talked about the NASDAQ today, 10,650. I mean, what the heck am I even looking at?
Right.
And it's there because it's an index that was created that was very innovative decades ago, and is useful in a lot of senses. And obviously, a lot more people are trading that than our new stock index because it's been around for so long. But these new looks at currencies and equities and everything else from the small exchange meant to make it easier on your eyes. I like looking at something that has moved from 152 to 162 relative to a dollar and change to $1.15,
Right.
58 cents. Then you get into literally freaking four decimal places over here. It's just too much. So, today we went deep on the dollar. I hope people in their trading accounts are going deep on the dollar because it's an interesting trade.